Let me tell you something. I've been a rich man and I've been a poor man, and I choose rich every fucking time.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. Be sure to take a moment and follow me at X at Market Canary. I provide market updates there. I release special videos there as well. I released a gold video last weekend, which is playing out beautifully. I have an urgent gold update at the end of this video, so we'll cover that as well. But give me a follow at Market Canary. It'll be pinned there in the comments and the video description. Guys, be sure to like and subscribe to the channel, help promote the channel. I would appreciate it. And let's talk about what's happening in the marketplace, because Powell came out yesterday and he didn't have a press conference as an interview format, but he heavily deviated from what he's done the previous years in his term. His term ends May of 2026, but Powell got very political. Yes, he was hawkish. That's why the market rolled over and sold off something we talked about on X and on the Discord. But Powell also got political. And what do I mean by that? So in Trump 1.0, he refused to comment on economic policy Trump was doing. He said that's not the Federal Reserve's role. They have a dual mandate, inflation and unemployment. He did the exact same thing under Biden. He did that exact same thing under Biden, even when he was called before Congress and asked specifically about the deficit spending, all these ludicrous spending bills we were doing, the printing of $1 trillion every 90 days. Powell kept saying the same thing. The Fed has its tools and it has a dual mandate. It is not its role to comment on the economic policy of the administration. Well, what did Powell do yesterday? He had a lot of comments about the economic policy of the administration. He got very political. He commented on the tariff policy. He commented that he believes it will be inflationary. He said it may delay the Fed's goal of getting down to its inflation target. These are all things that Powell said. He also commented about the cuts, throwing a little bit of shade at Doge without mentioning Doge. He said the cuts that are being done are not enough and the bigger cuts need to come from the big elephant in the room, such as Social Security or Medicare or defense, right? So Powell got very political. Obviously, it upset a lot of people. Regardless of politics, he deviated from his script that he's been doing for years as the Fed head. And part of that is because he knows Trump has no interest in reappointing him, and he knows his time is getting short. Now, there's a lot of talk in the media about whether or not Powell can be replaced. I hope that he can. And they said that you can't replace him without cause as an appointee. Well, what about cause? What about incompetence? Isn't that a cause for being fired? For saying inflation was transitory, allowing it to get north of 9% on the CPI, which in reality translated on Trueflation and at the grocery stores you guys saw to 33% inflation across grocery products, to 20+% inflation on Trueflation. And by the way, where is inflation right now? Let's look at this on the chart real quick before we get into this, because I want to show you guys where is inflation right now. This is the government numbers. Inflation's at 2.4%. When did Powell do an emergency 50 basis point rate cut? When I say emergency, I mean the size of the cut. Previously only reserved for emergencies, Powell cut 50 basis points in September, just 3 months before the election, then followed it up with another cut, and inflation was the exact same level it is now, according to the government, 2.4, and Powell complete 180, once again, being hawkish when he should be dovish, and being dovish when he should be hawkish. He's doing another 180, and he came off super hawkish saying, we don't know. We think it's going to be inflationary. We have to see what the targets are. It's absolutely amazing how incompetent this guy is. He's probably going to go down as one of the worst Federal Reserve chairs that we've ever had. And maybe because of him, there'll finally be some dramatic changes at the Fed. I don't even want a Federal Reserve, but that's a separate conversation. But he's always behind the curve. He raises too late, he cut too early, and now he's not cutting when he should be cutting. What's inflation right now on Trueflation, by the way? 1.35%. I know the inflationistas, and I have these conversations in the Discord every day. A lot of people think we're going to have massive stagflation or hyperinflation, basically that Peter Schiff argument. Busts are deflationary, and this administration knows there's a potential for a bust. Scott Bessent, the Treasury Secretary, said it himself that they see this financial calamity as a possibility and they're doing everything they can to avoid it. Part of that is you got to loosen the rates, free up liquidity. So we have housing starts collapsing. The economy is rolling over. Every recessionary indicator has triggered, as you guys know. I showed you this last video. Lee, throw up the animated chart again. This is that infamous SOM rule, which is nothing more than a ripoff of a pre-existing unemployment rule, but now it has a name. So here's the SOM rule. Over on the right, every single time the unemployment rule has triggered, and this triggered back in August 2024, the economy has already been in a recession. The normal recessionary drawdown in the S&P is a Dow retracement, 33%. That's the average recessionary drawdown. You went down 20% already, so you're 2/3 of the way there. The market wants to rally. It's being suppressed right now, and I think it's one piece of good news from doing a nice move up to our first key level of resistance. I'm going to show you guys that in the chart. But just understand, when they want to blame tariffs on a potential recession, every recessionary indicator has already triggered. But this is the game of politics. This is how it works. Last summer, SOM rule triggered. 100% accuracy rate for predicting recessions. And here we are in April, going into May in a couple of weeks, and people are going to act shocked and surprised if and when we finally get the notification that, wow, I think we really are in a recession, Bob. You finally see that on CNBC. That's final admission, but they're blaming it on the wrong thing. So you know what, Lee? Without further ado, let's go ahead and start the show. Guys, be sure to check out SimpleFX, a fantastic place to trade. If you live outside the US, you can trade everything there. That's what that little ad was. It helps support the channel. I would appreciate it. And you can check out Bitunix if you live anywhere and want to trade crypto. Those links are in the video description. Let's start off. Let's look and see how the lemmings are feeling today. Oh, the lemmings are in extreme fear. They're very scared. Why are they scared? Because the media keeps telling them how horrible everything is. Guys, I'm looking at the charts and the markets want to rally. Look at the VIX. The VIX is at 30. Okay, no big deal. Came off its spike of 60 plus. When we look at this is our S&P futures on the weekly time frame. What's my blow off top targets? 7,000 is what we're looking at based on Fibonacci, not based on a number out of my hat. We're looking at geometric expansion in the marketplace. That number could go up to 7,500, right? We don't know yet, but those are my blow off top targets. And even if you do not think that's possible, I'm going to show you where the S&P is going to go. And I have a high confidence level this move is going to happen. Let's look at the S&P first. First of all, let's just measure this downturn, right? So we had the downturn. The downfall is S&P futures on the daily, 21.5%. Big move down. Again, average recessionary drawdown is 33%. Average bust, as you guys know, is 50%, right? Now, I know a lot of people are telling you, well, what this is going to do is roll over, come back down, and then they have their microwave, subwave, subterranean waves, all these different waves that they're counting, and then that's going to be the reversal. What I'm looking at, guys, is the macro married to market geometry. And when I'm looking at this, look how strong and resilient the market is still. Think about this. Powell just shit all over the market with his hawkish tone. It's still, the S&P still did not even come back down to retest the 382. The bare minimum retracement after the God candle rally, a 9% rally, a total year's worth of returns in a single candle, which if you watched my previous video before that rally, you knew that rally was coming, right? So this is still very resilient. And when I look at this, I'm looking at this as almost, it's starting to form, this is a daily. You go down to a smaller time frame, you can see a little bit better. You're starting to form a triangle type pattern. Okay, that's what you're forming right here. I'm telling you, this is what I think the market's going to do next. We need one piece of good news. We've had horrible Powell. We had the trade deals. We had the media instilling fear. We're in extreme fear in the marketplace. You get one piece of good news, such as a really strong trade deal with Japan, which is trying to be worked out, something like that. You get one piece of good news, you're getting this move, okay? This move is coming in the market. I want you to understand what this move is. This is your higher low, your W fractal, which I could teach an education course on this, guys. Go to marketmakers.trade, join the Discord, join the website. It's all there for you. But the W fractal, this is what I think is happening. So right now we're at 53.39. You're going to come up and in basic YouTube TA, you're going to retest the 200. Okay, that's going to happen. You're going to get this move and you have the base of your Wyckoff fractal right around that 58.50 level. So I think this move is going to happen. Now, if you think the market's done and it's going to roll over, that would be a good spot for it to happen. Retesting the base of this topping pattern, retesting the 200, you fail, you roll back over, you got to take out these two previous lows, and then you're going to the next leg down, right? You're done. My base case is new all-time highs because I see the market looking like a coiled spring. The banks crushed earnings. United Airlines did better than expected. Remember, earnings are backwards looking and people are very simple. And if they keep hearing news about all the money these companies are making, you're going to see people pile in. Retail is going to be the one that drives this up, and then big dumb money is going to have to follow because they don't want to miss out on the gains. Blow off tops happen in bubble cycles. We have not had the blow off top yet, in my opinion. Case in point, look how horrible all of the news is, and you're still at 53.50 right now on S&P futures. With what Powell said yesterday, we should have sold off all the way down to 5,100 at the 618, but we didn't. We didn't even retest the 382. All of this is being baked in, and look at Bitcoin holding that 83, 84K level. We're going to cover that as well. I'm telling you, loaded spring. Good news comes out. Don't know when it's going to be. Could be end of this week. Could be over the weekend. Could be next week. You're going to see this move. You will get this move, okay? Up to the 200 again. You will get this move, and then I think you're going to pull back, fight it, break through it, and I think you're going to your blow off top. And again, those targets, guys, if you're on the same page as me, based on market geometry, 7,000 up to 7,500. That's what I think is going to happen in the marketplace. Key support level to hold. If you get more bad news, more fear in the market, your next level down is 5182 and 5101. Those are your key support levels to hold beneath you, but you're flagging, and I think you want to spring out. Let's look at NASDAQ 100. NQ, this is futures. So we're looking at NASDAQ, same exact thing. Went ahead and drew it to save some time. You're going to get this move back up to the 200. I think you're coming back up to 21K to retest this base. So that means getting above the 200, getting some volatility right at that level. You're at 18.5, forming that same type of triangle type flagging pattern right now. Price is compressing. The candles are getting smaller, and it's going to make a decision down or up. And I know a lot of you think it may be down, right? But I think it's going up, okay? If we come down, watch 17.9, 17.578. Those are levels for support. And even if that still happens, that just means the spring can be higher. Remember, the way the markets work, the way geometric expansion works, the further you pull it back like a slingshot, the further you can shoot the pebble the opposite direction. So I would prefer if these would retrace to at least the 50%, but they're holding strong. The NASDAQ came down and retested the 382, and it's making the same exact pattern. It's the same big dumb money in all these markets, guys. We look at Tesla. I've been posting about Tesla on X. I told you guys where I was accumulating. I made videos on the Discord as well. But down here in this range, and Tesla came down to 212, 213, got all the way back up to 275. It's holding support at 236, and you're at 242 right now. Tesla is building this compression pattern as well, which you can see here in the chart. You have a clear trend line top, and once this thing completes and the candles get smaller and smaller and you get Finally, a good piece of news. I think Tesla's going to break out. My target for Tesla is 383 to come up to the upside in a lower high scenario. 383.76, and obviously if you take out the all-time high, you're going to a new all-time high, but 383 is a viable target. It's 140 bucks higher than you are right now. So look at Bitcoin. Looking at Bitcoin here, I mean, guys, I just have to tell you, I know, I have YouTube, obviously, right? And I have a phone. I can't even watch YouTube, TA. I think it's horrible. But when I look at the thumbnails that pop up on my screen, I see, everybody's telling you how bearish this is and how it's crashing and everything. I understand, but like when I zoom out, I just look at the 3-day chart. I don't understand what everybody's freaking out about. You have a low, you have your higher low, you have a higher low still. You haven't even come down to the 618 from this massive accumulation flagging pattern, right? That's all the way down at 72K. You never even came to that. You're up at 85K right now as I'm recording this video. Your key supports are 79 and 72. Okay, that's your key supports. But when I look at this pattern, I think you're going to complete this move. Again, even if you're super bearish and you say, Brendan, I don't care. I like your videos. Lee does great intros, whatever you want to say. But I think everything's rolling over. You're still coming up to re-challenge this high. Okay, price moves in waves. You'll come back up to re-challenge this high, and we'll look at that on the daily chart, but that's the basic move. But I think you're getting the blow off top. I think you're completing wave 1, wave 2, 3 waves to a top, 132 to 143. I think you're getting your 3 peaks, peak 1, peak 2, peak 3, and your domed house pattern, which is the pattern just like this, which is nothing more than a head and shoulders, okay? 3 peaks and a domed house. I think you're completing these patterns. I think you have higher prices. I think Bitcoin is a liquidity barometer, and the fact that it's holding out at 85K as the market gets shitted on day after day, including Powell yesterday, I think is quite amazing that Bitcoin's at 85K, right? So we look at Bitcoin on the daily. The key level to flip right now is 88. You got above your descending trend line, which again is good. You got to flip 88. And of course, you got to flip 92 to get back into this accumulation zone, okay? And where would this go if this just was a lower high scenario? You'd still be getting this move, right? Let me show you with an ABC. You would still be getting this move. We got to connect this somewhere. Let's just use this point here. You'll get this move. You get a move up. You got your wave down, okay? You got your wave down. And even the 618's at 96K. The 72% is at 100K. So let's just say it's going to collapse. You're still getting that move, okay? I still think you're getting that move. You're going to come up and re-challenge and fail if you roll over. But I think you're going to make a blow off top. Watch the key levels of support below you. Again, next one at 79 and 72. Okay, these are your 2 green key levels of support. Resistance at 88.92. Bitcoin's going sideways. It's accumulating. It's spiraling. Your 200's above you. It's going to move when the markets are ready to move. Now, let's go ahead and proceed towards gold, sir. I went ahead. Watch my gold video. We talk about gold cycles. My version of the gold cycle, the parabolic cycle, lasts 7 to 8 weeks. Every time in market history, when going back for 25 years, I should say, gold goes parabolic, you have a 7-8 week cycle, and then gold typically retraces 20%. Now, what you're looking at the screen here is geometric expansion. Gold, perhaps because it's elemental, right? Gold's elemental, so it adheres to ratios very, very well. Now, my target here is gold futures, the most liquid. I'll show you the CFD price as well. My target here was 33.79 to 34.59. We got all the way up to 33.71.9. So basically within $8. And what's gold doing right now? It's retracing. Now notice the expansion here. A lot of you guys see this, and I'm sure you see this on X. Oh, what is this? Oh, it's a cup and handle. Okay. But they don't measure it with Fibonacci ratios, which is far more important than just a basic pattern structure, right? But when we look at this 61.8% expansion to the target, it's interesting, right? What about if we go from our low in November 2015 up to where we are right now. If we take this, a doubling in the marketplace, 222%, right? So you see that. What about to this wave for where your handle formed, okay? A 100% move. You have a 100% move and a 61.8% expansion. You guys do the math on that, right? So again, gold adheres to ratios, and this is something you want to watch because this cycle is supposed to end this week or next week, and it's already retracing. So if you're interested in that, watch that gold video as well. I told you the importance of flipping and holding 3,300. You're below it in the CFD price. You're back above it here at 33.25 in the gold futures. If you can flip that 3,300 level, hold it for support, it opens up the ability for 3,700. But I think gold's going to look to fail here between the 33.79, 34.59, and it may in fact be putting in that first leg of a top. You're going to get volatility, may get some up thrust to a new all-time high even, right? But just understand the zone because this is the danger zone for a gold reversal. And let's look at the CFD price. 33.46 to 34.52, and of course you came right into it, 33.57, right? So you got right into the box. We look at retracements here, guys. I know a lot of people are going to be trading this on CFDs. You look at retracements. If this was the top, and again, I'm not saying it is the top, but I'm saying the cycle timing is telling you it should be putting in a top this week or next week. If this was the top, normal retracement is 20%. Takes you down to roughly 2,700. Look at that, the 382. And of course, if this is something more catastrophic, such as the GFC when gold went down 34%, you'd be looking at a much deeper price target of 2,280 down to 2,100. Okay, so that's a normal retracement on a parabolic move of gold. And just look at this again. Look at the expansion from your cup, from your handle up to the exact dollar on price. Just look at how this worked out geometrically. 61.8%. 618, anybody? Gold, it's elemental. It's fun to trade. I got a lot of physical gold. I hope everybody has a fantastic weekend. Follow me on X for all the updates, guys. Consider checking out marketmakers.trade. I would love to see you on the Discord. Take care, everybody.